Well, guys, market is bleeding, and I probably know why it's happening. Number one, let's talk about politics. I recorded a video recently in which I talked about $2,000 stimulus check that Trump has promised. And I said that this time it might be true because, first of all, the last time when he said that he's going to issue Doge stimulus checks, that he never promised. He said he might do it. They're looking into it. They're thinking about it. His language was very different. But this time, his language was completely different. It's like he was almost promising that he will be issuing a $2,000 stimulus check. And the other reason why I said that he may be issuing stimulus check is because the money that he received from tariffs, he wants to spend that money before the court decisions come out. In case it's illegal, then he can say, oops, that money is spent, give me a break. And then, of course, on his way to jail, which he's probably going to write off anyway, he will get that way. And obviously, court is going to say, well, the money was spent on Americans, so let's just not drag it any further. And on that note, people said, I have TDS. I don't have TDS. Those of you who are not aware of what TDS is Trump derangement syndrome. That's a term that's used by Trump's um, promoters or Trump's supporters in order to derange those basically who are speaking against Trump or who are speaking stuff that they don't like, which they think is against Trump. But it wasn't against Trump. It's just I was speaking how Trump functions, and that's how it is. Anyways, now here's one more thing that Trump announced. Obviously, Trump announced that he's going to uh, ask banks to introduce 50 years mortgage. Whether it's good or bad, that's a different story. You know how I feel about that. I feel like the central bank uh, mm, um, should not exist. Federal Reserve should not exist. Interest-based businesses and banking industry should not exist. This is the worst business that existed in the history of humankind. Not for those who run those businesses, but those who suffer because of those businesses. Every economic crash in the world, every housing crash in the world, every recession in the world is caused by banking industry. If you have not watched my videos, I have recorded a series of videos, banking, currency, and finance, in which I gave the solution to the problems, how to get away from banking industry, and how to have a free economy, free markets, and also how to have interest-free financial systems. Please subscribe to my channel and watch those videos. Anyways, I'm not trying to promote my channel, but I really want to educate you guys like why I think what I think is happening. Now, Trump obviously announced that he's going to introduce 50 years mortgage on residential properties and commercial, I believe. Whether it's good or bad, we can talk about this later. But in the short term, I think that is going to boost the housing market. Also, the people who are not able to purchase mortgages because the payments are too high, they will be able to purchase homes. More buyers are going to be in the market. As a result, there's going to be demand for the houses, and the housing prices will skyrocket. However, the drawback is that when people get 50 years mortgage, they'll end up paying much higher interest rate. Also, the first 5 to 10 years of their payments is going to be basically interest only payment. So in the long run, they'll end up paying a lot more money than if you were to get 30 years mortgage or 15-year mortgage. Even 30-year mortgage to me seems very long term. So if you're 20 years old and you buy a house, it won't be paid off until you're 50, which is old in my opinion. But anyways, but lots of people could benefit from it. Those who are on low income, who cannot afford to buy a house right now, but they're paying rent anyway. So basically, they'll have their own property. They'll be the owner of the property. So it's like they're paying rent, but they have the freedom to do whatever they want to do in that house. So it's not a bad thing necessarily. The other thing is now the government is opening back up. Donald Trump announced that he's not going to release the job data. Again, you guys are going to say, I have TDS. I don't have TDS. Not that I rely on these reports to begin with. These reports are obviously very manipulated by the time they get to us. We don't get 100% accuracy on those reports. But even then, the little bit information that we get, he's trying to stop that as well. And the reason being is, in my opinion, I think he wants Federal Reserve to cut rates. And Federal Reserve says, well, I am data dependent, And now for the past couple of months, we have not been receiving any information on job reports and CPI and PPI, which is in the market, it was best trading opportunity for us. So market was obviously going skyrocketed, because sometimes no news is a good news. That doesn't mean in the background the problem is not happening, but at least we don't see it because the data is not being released to us. And I bet you that Donald Trump and some of the Federal Reserve uh, members have seen the data and they know what's coming. And that's probably why Donald Trump said, well, I'm not going to release any data because that's not necessary. I want you to cut rate, because he understands if that data is released, then maybe Jerome Powell won't cut rate because the report looks that terrible. We also know there has been lots of layoffs taking place. Also, I was listening to one of the member of, I think it was Federal Reserve, or it might be just some politician at the mainstream media, and he was saying, well, because of the Democrats shut down, now we're going to have an economic crash. Now they see what's happening because of the government shutdown, and now they're going to blame it all on Democrats. I don't support any party. I don't like politicians. I think they're all crooks. They're all roaches who just munch on us, and then they fill their pockets and they don't care about us. So whether you call that I am just obsessed with Trump or I'm obsessed with, I don't like any politicians, period. But the problem is we have no choice but to deal with these guys, and they are the one whose words make an impact in our lives. They open their mouth and suddenly stock market is crashing. They open their mouth and government is shut down. People are suffering because they don't have food and all that stuff. But anyway, that's just a rant that I on the side note. That's not the reason why I'm recording this video. So he's trying to hold that data back. He doesn't want to release any of those reports. Isn't that a red flag? It is a red flag. I don't 100% depend on those reports, but the little information that I get, at least it kind of gives me the opportunity to calculate and see where the future stands. How should I plan my buying and selling of my stocks? How should I plan depending on which direction the economy is going? Because being a mother, being a wife, being being an American, we know how many problems we have right now in this country because of these bad policies that the politicians are making. So that's the other thing that I have concerns about. And if you watch my videos regularly, I did tell you that once government is opening back up, it might be a short-term bear market. The reason being is right now we cannot see the data, but once the government opens back up, obviously the CPI, the PPI, the labor market reports are going to be out. And once the numbers come up, it's probably going to freak the market because numbers are probably not going to be that great. And that might cause the stock market to crash in the short term. And I think that's the reason why market was bleeding today, because everybody is concerned about these reports, number one, but that's not the only reason. The other reason is that I think we have a liquidity problem, which means in simple English, people don't have liquid cash to buy into the stock market right now. Not only that, people are also getting margin calls, which means they have to sell their stocks to pay their debts, to pay their margin. And that's the reason why market is crashing, because everybody has to pull the money out from somewhere to pay their debt. So be very mindful when you're using your margin on your accounts. It's better to use cash to buy and sell your stocks. That's what I do. I've never used margins. I don't even do the calls and put options. I just simply buy stock, hold them, and I sell them. I just keep my life very simple and easier. That's the other reason why stock market is crashing. Now Tesla is crashing for a very different reason as well. Of course, those two things impact Tesla as well. Tesla is no exception. The other thing is Tesla was skyrocketing because there was lots of enthusiasm around this humanoid robot, the robotaxi, FSD, and then finally, Elon Musk's pay package stock went up to $477, but now the investors and traders are pulling the money out. So, for example, if you've been holding stock since 2017 or 2021, which I have been holding for that long, your profits have gone way up, and it's time for you to sell some of that. and maybe cash in. Plus, people are selling Tesla because they want to diversify their portfolio. And now, since that there's an economic shift coming with the rate cuts, with the government opening back up, maybe I have a feeling now. I've been saying we've been through recession, but now I'm getting a little nervous because I feel like we may see a minor recession given the situation, the way things are working with the government shutdown, with all this drama that's taking place in the White House. We may not hit it. I'm still not very concerned, but just a little concern is there at this point right now until we see how the labor market looks and how CPI, PPI reports look, then maybe I'll have a little bit more confidence on the market than I have at this moment. So the other reason is people are selling Tesla because it had peaked so much, went all the way up to $477. So it's like sell the event kind of, but sell the news kind of event. So people are taking money out, but is this creating a dip opportunity, a buying opportunity? Possibly. Some of this crash is short-lived, which means it's going to be just the short term. The other is going to be long-lived. For example, Tesla, in my opinion, is just a short-lived problem, which I think this dip is going to be bought back right up. There's so many people waiting on the sideline who want to buy into Tesla, and this is a good buying opportunity for them. You can also increase your position without paying too much money for Tesla as well. I don't have any liquid cash. If I did, I would have definitely, absolutely bought today because it fell under $400. Absolutely a perfect buy the dip opportunity was created today. So this problem is short-lived, but if we have liquidity problem, mean if there is not enough money that investors hold on the sideline to buy into market, then that's a bigger problem we have. Then people will sell to pay their, if their margin call, they will have to pay their loans. They'll have to pay back the margins, and in order for them to do that, if they don't have any cash sitting on the sideline, they will have to dig into their equities and they will have to sell those in order for them to pay back the loans. And that's a bigger problem, a little bit long-term bearish signal, in my opinion. Tesla will be bought back up, and as I said, it's just a short-lived problem. Uber also, I mean, everything was down today. Uber, Nvidia, Palantir, you name it. But you can tell as soon as they drop to a certain level, people start buying back into these good quality, these tech stocks, because it makes sense for them to get into this position or increase their positions. So that's the other reason why stock market was red and it's going down. Now, what to expect? I think December 9th, everybody is looking forward to it. If Donald Trump lets the data release and we get some of those CPI, PPI, and labor market reports, I think that is going to help investors a lot to make up their mind and decide what they want to do, if they want to go back into the stock market or they want to wait on the sideline till things settle down a little, because we know economy is still strong. Believe it or not, it is. Inflation is still skyrocketing, and with this liquidity problem, I have a feeling that Fed will have to start printing money sooner than later, because they've been talking about expanding their balance sheet, which I have recorded a video. This is the only balance sheet which has no balance in it, but they're going to start printing more money to fund the liquidity crisis, so that people can borrow money at a cheaper rate and they can pay back their expensive loans. But what's going to happen ultimately? That's going to cause more inflation. And that inflation will go on. Then, of course, they're going to do quantitative tightening again, which means they will raise rates again so people don't borrow money. And this vicious cycle continues, obviously. So that's the other thing I'm looking forward to. If they start printing money, I think in the short term market will be excited, but in the long term it's going to freak the market out, because they'll say, oh crap, we are in trouble. Hopefully we have smooth landing and we don't go into recession, and people have money sitting. I mean, last time I checked, which was about a month ago, the people still had $8 trillion sitting on the sideline into the money market, which has not been invested into the market. But that's just the data that's collected. Who knows? Maybe that money belongs to dead people, and maybe that money is sitting aside because people have other plans to use that money. People are getting out of these high performers in the equity market because they want to go ahead and diversify their portfolio. Some people will invest into real estate, gold, Bitcoin, because if you notice, Bitcoin has dropped significantly. Actually, all the cryptocurrencies have dropped significantly. So imagine if you put $98,000 into Bitcoin today, in 2 weeks it goes up to $125,000. Boom, you like 27% profit within 2 weeks. So you can't beat that. I think that's what people are doing. That's why Tesla is pulling back so much. It was down over 7% today. My heart was crying. I just walked away. I didn't want to look at it, but I know it's short-lived. If you have money, not a personalized financial advice, a perfect buy the dip opportunity on Tesla. So go ahead and buy it. Same thing with Nvidia. Palantir, I'm not sure because I'm a little nervous to buy Palantir right now because it's at 28 PAG ratio right now. It's like way overpriced. But you never know. A year from now, I'll be looking back at this video and saying, dang, why didn't I buy it? It was so cheap at the time. But right now, the valuation is extremely high. So risk and reward is just not making any sense to me for now. So that's why I'm just staying away from Palantir, at least for now. But Tesla, Nvidia, AMD, I think those are at good prices to start, at least a position. And then maybe you can DCA afterward. Anyways, going into next week, what's my plan? If I had the money, I would have started lots of new positions. But as I said, liquidity crises are taking place. I am the victim of liquidity crisis. I don't have any cash and I don't get any loans. I don't use margins. I don't borrow money. The only loan I have is my mortgage and that's it. I try to use cash as much as I can. So I'm not going to get into my margins and use that money to invest into the market. But I wish I had more cash to buy some of the names that I mentioned earlier. For example, Nvidia, AMD, some of the AI and quantum stocks are looking very juicy right now. It's a good time to start position in those as well. Buy more Tesla, of course, but I don't have any cash. But if you do have it, not a personalized financial advice, be very mindful. You can start a position. I think it's a good place to start. In the short term, of course, we're going to have some hiccups, some turbulence in the market, but I think overall we're okay if we can get the data and if Trump releases the data, so at least we can get a glimpse of what's happening in the economy. And I have a feeling that Jerome Powell probably would cut rates 25 basis points because even though we can't see it, they probably have access to it and they can make decisions accordingly. And I hope they do have access to it. And if that's the case, I think he will have to cut rate because with the labor market plummeting, I think he has no choice but to cut another 25 basis points. So now I'm totally depending on the reports and what Jerome Powell is going to decide. So in the short term, of course, there's a turbulence because people are nervous. But I think going into next week, by mid next week, I think we should be okay. We'll recover. Obviously not at this pace because it takes time for the market to recover, but you never know. If the reports come fine, I think people are just going to jump right back into the market. And if you watch my last video, I did mention only 28% of the fund managers are meeting their goal this year. So those of the rest of them who are waiting on the sideline, this will be a perfect buy the dip opportunity for them because if reports come out fine, those people who are not able to make their goal this year, they will quickly jump in. So they'll try to grab every bit of it that they can towards the end of the year. So at least they can make themselves look somewhat decent in front of their clients. So that's my take on this. I hope this video helps. Give my video a thumbs up. Subscribe to my channel if you haven't already. Please be safe out there and be mindful how to spend your money. Until next one, take care.